Remember the good old days when you could sell your stuff on eBay and you didn't even worry about the taxes? It's just not something that you thought about. You could sell your old stuff, you could make a few bucks, and everything was right in the world. Well, things have changed. With the exponential growth of e-commerce and increased regulation, people are realizing that taxes can no longer be ignored. And today I'm going to show you at exactly what point you need to start worrying about taxes and Uncle Sam with your online sales. Hey, my name is Mark too, and I'm a CPA who helps online sellers with the numbers side of their business so they can grow their businesses profitably. And one question I get really often from beginning and experienced sellers is, do I have to pay taxes? And if so, at what point do I have to start paying those taxes? And as is the case with most tax questions, it depends. Most of my clients are selling on one online platform or another, and I too have an online reselling business, so I understand what you're going through and the challenges that are unique to small business owners in the online selling space. And you might be saying, well, I'm not a small business owner. I just sell some of my personal stuff once in a while. And you might want to think again, because the IRS does consider you to be a small business owner, a sole proprietorship to be exact. And you might also say it's not a business, it's just a hobby. And I'll talk a little more about hobbies in another video, but actually the income you make from a hobby is taxable as well. And setting up your business as a business rather than a hobby is actually going to be more advantageous from a tax perspective. And if you want to see more about that broken down right now, you can check out the links below and get a copy of my Reseller Finance ebook or come join us in my Reseller Tax Academy. If you're selling your stuff with the intent to make money, the IRS is going to consider you to be a business, even if it's a really small one. So for the purposes of this video, we're going to just make the assumption that you're a business, specifically a sole proprietorship or a single member LLC. If you're a partnership or a multi-member LLC or an S Corp or a C Corp, those can be a little bit different. So at what point is the money you make in your online business subject to tax? This is a good question because there are some types of income that aren't even includable on your tax return at all. The most common examples are gifts and inheritances. Any money you receive as a gift or an inheritance is generally not taxable and not even reportable on your income tax return. Unfortunately, with us online sellers, that is not the case with our reselling profits. In general, if your business generates a profit, it'll be subject to taxation. Now, that doesn't necessarily mean that you'll end up owing tax at the end of the year because there are so many things going on with your tax return that are going to determine whether you owe or whether you get a refund. So what I mean is that your reselling profit should be included as part of your total income on your tax return. It's ultimately used in the tax calculation to determine how much you owe or how much of a refund you get. So let's talk about profit. What is it? Profit is not the same as your sales. It's also referred to as your net income. The IRS likes to call it your net earnings. Your profit is simply what's left over after you subtract all of your expenses from your total sales. So let's do an example. Say you start selling your own stuff on eBay or Poshmark and it goes better than you thought and you end up selling about $10,000 worth of stuff online. Now when you're selling your own stuff, you likely won't remember what the original cost of everything was, and I'll talk about what to do in that case in another video, but let's say that the total cost of those items was $5,000. And let's say that you had other expenses of $4,999, like travel or software or other expenses. So after you subtract the expenses from the total sales, you're left with $1 of profit. And as silly as it may sound, the IRS expects you to include that $1 of profit on your income tax return. And even though that $1 is reportable, you may or may not end up owing tax because of the different personal deductions and credits you might have on your return. So let's say you're a single taxpayer, maybe a college student, and you also had a W-2 job, and in that job you made $12,000. When you combine that $12,000 with the business profit of $1 on your tax return, you're going to show a total income of $12,001. Well, the standard deduction for single filers in 2020 is $12,400. So that standard deduction is going to more than offset that $12,001. It's going to basically wipe it out and you're going to be left with a taxable income of $0. And if that's the case, you may not need to file a tax return at all. But in most cases, you're going to want to file a tax return because your employer has likely been withholding federal taxes or state taxes, and you have to file your tax return to get that refund. Where the IRS is less flexible is when your business starts to earn $400 or more in business profit. It's at that point that your business is subject not only to income tax, but also self-employment tax. And that's another thing I'll talk about more in the future, but self-employment tax is basically the self-employed version of your payroll taxes, Social Security and Medicare, and it ends up being about 15% of your profit. And most individual deductions, like the standard deduction that I mentioned, do not wipe out your income for self-employment tax purposes. So let's just say your only income was a profit of $400 from your online reselling business. The standard deduction would wipe that out to zero for income tax purposes. But for self-employment tax purposes, it doesn't get wiped out. It's calculated on the $400. So you're basically looking at $400 times the approximately 15% for self-employment tax, and that's going to be the tax that you owe at the end of the year. So the bottom line is that your online reselling activity should be included on your tax return. And there are a lot of different circumstances and exceptions, so it's always a good idea to run your personal situation by a professional. And also continue to educate yourself. I invite you to check out my Reseller Tax Academy where you'll overcome your tax anxiety, and I'll show you how to optimize your tax and accounting situation so you can grow your business profitably. I also want to mention business losses. So that's just where you spend more than you make, where your expenses exceed your sales. In this case, you end up with a business loss. Some people think, well, if I didn't make any money, then I don't have to report it. You should still report your business losses because those losses can actually offset or reduce other income you have on your tax return. Or if you don't have any other income, that loss can actually be carried forward to future years to offset future income. So it's usually a good idea to report your losses as well. It's usually only going to benefit you. So whether you have a profit or a loss from your reselling business, make sure you include it on your tax return. And again, it's always helpful to run your situation by a professional to see if you have anything unique going on. Thank you for watching. I know this is not always easily digestible stuff, but if you hang in there, maybe rewatch their videos, subscribe so you can follow along, and I think you'll find it really helpful.